Hey everyone, and welcome to another episode of the Well Off Podcast. Thank you for joining. As always, I interviewed a pretty awesome guest today. His name is Eric Upchurch, and Eric is a former military vet who actually started. He became interested in investing in real estate at a fairly young age, and he educated himself on the general partnership structure, general partnerships and limited partnerships. So throughout his education, he actually was able to acquire or become a general partner on 576 stores, become a limited partner on 575 doors, and he's involved in over $62 million in multifamily assets. And he invests in 80 plus unit apartment buildings for the most part. So we had a chance to cover a lot of ground on this episode. I hope you'll enjoy. And just wanted to remind you that if you are interested in investing in real estate, I would love to connect with you. You can go to my website, welloff.ca, and book a call so we can chat about your journey and I can figure out how I can help you get to the next level. I mostly focus on small multis myself, 4 to 6 units in the Golden Horseshoe area. So if that's something you're interested in, go ahead and reach out to me. And also, if you'd like to download some free reports on real estate investing, I have a couple of different ones that you can download for free. Just go to www.welloff.ca/report and get yourself a free copy. Enjoy the episode. Welcome to the Well Off Podcast, where the goal is to motivate, inspire, and share success principles. I am here today with Eric Upchurch, and Eric is a former, from what I understand, part of the military at some point, and he has a passion for educating the military community on how to create long-term wealth through real estate investing. We're going to dive into his story quite a bit, or in just a moment, I should say. But Eric, welcome to the show. What I like to do is start off by asking you a little bit about where you grew up. I know you sent me some information on that, but where'd you grow up and a couple things you remember from your childhood?
Yeah, sure. Thanks for having me. I'm really glad to be here and to share anything that I can, and hopefully it'll inspire somebody to take action. So I grew up in Iowa, in the Midwest, in the U.S. Most of your audience is Canadian or just global, worldwide, whatever. But south of Winnipeg, about 10 hours probably.
All right. Yeah, most of our audience is Canadian, but
somewhere in that
yeah.
ballpark, right? So Iowa. Yeah. I grew up there. Thankful to grow up in a humble spot, and moved west after high school to California. Had an opportunity there. Went to college, then enlisted in the military and in the Army. And after that, went back to the Bay Area and San Francisco Bay Area and started investing there.
Cool. Yeah, that's cool. So this is the first time we meet, just to give the audience a bit of a background here. So that's why I'm kind of learning a little bit about you as we go.
Yeah, great.
But I did read a little bit about your story, and it's pretty impressive. Like some of the numbers I'm seeing, you're a general partner on 576 doors, limited partner 575 doors, and then you are involved in over $62 million in multifamily assets. So that's a pretty cool thing to start with nothing, pretty much, like no real estate investments, and to grow your portfolio to over 62 mil.
That's all in less than 3 years. And I think one thing that I should explain is that it's possible for anyone to do it if I did. A series of steps that are relatively well defined, actually. And I'd love to go over that towards the end of the show when you ask certain questions and stuff. But live by that success formula, and it's tried and true. Not unique to me necessarily. There's some nuances in there, but otherwise, anyone can go out there and do it. If I can, anyone can.
Yeah. How do you go from being involved with the military to becoming a real estate investor? And also, are you like a full-time real estate investor, or do you do anything else?
No, I mean, so I have a wife of 15 years. I have 2 sons. I have a full-time regular job also in sales that I've had for 10 years. And on top of that, we buy apartments, and we run a company called Active Duty Passive Income, which is teaching military veterans that you don't have to retire in the traditional 20-year stint in the military. You can, there are alternative ways, and passive income, finding multiple sources of passive income is one way to do it. So, and kind of helping veterans discover that transition in a way that's effective for them. So, because it is difficult sometimes to transition from service to the civilian sector for many reasons.
Oh yeah, for sure. Okay, yeah. So can we dive in a little bit on your portfolio here? So general partner. So you're not. Is this something that you're actually kind of heading, or sorry, like is this just yourself? You've got a kind of GPLP type of model, or are you partnered with other people and you're kind of following along with them?
Yeah, it started off. So I started off investing. So I was bouncing around in the San Francisco Bay Area, like I said, and traditionally not doing traditional investing because I was just got out of the military where you don't make very much money, right? And I was thrust back into the Bay Area where my wife and her family are from, and we just went back there to get started. And I kind of just started looking around and going, like, I have a rental property in Savannah, Georgia, where I was stationed, and that's making some money, but I see there are other people making money in real estate investing with rentals. So how do I step that up? What does that look like for me? And then I just started reading the right books. Some of them are mindset, some of them, Rich Dad, Poor Dad. I went to a seminar locally in San Jose, California, and I just started really building a little bit of momentum, but really that kind of horizontal learning curve, just really getting a solid financial kind of foundation and outlook underneath my feet. And then I applied whatever I could apply to my current situation, which in the States, there's a product called the VA loan, Veterans Affairs loan. If you've served in the military, you can buy a home up to a fourplex with no money out of pocket. And no primary mortgage insurance. So usually if you put less than 20% down, you have to pay an additional, PMI, but not the case for veterans. Excuse me. So I bought a house with a VA loan, bought it for $500,000, which is, in the San Francisco Bay Area, the cheapest thing I could find at the time. 2 years later, my eyes were wide open when I realized it was worth $690. And nice. So, and I didn't do anything to it. That was just market appreciation. So that was step one. That was house one. And that was my live-in flipping kind of capital building phase. I did that another time, same thing, but we actually forced some appreciation in another location in the Bay Area. And that was a $250,000 spread in 9 months that we made on that house. And then we did it one more time. And so the whole time, as I'm learning this thing, I'm going, okay, well, I'm not technically like an investor, I guess, but this is an important piece of the investment puzzle. Where does my money come from, right? Everyone's wondering, like, where's my deal and where's my money? So at that point, we realized, okay, well, we kind of inadvertently on the first one made some money. The second one, we were like, okay, this is intentional. Let's keep doing this. And we have our kids in tow also, by the way. We're living in these houses and doing this, but that was our capital building phase. Then I just started networking, found a friend who has now syndicated a couple billion in multifamily. So I reached out to him and he goes, Eric, let me give you this example. If you were to have invested, say, $100,000 in this last asset that we just sold, in 5 years, I would have turned, or the asset would have turned that 100,000 into 290,000. And my jaw kind of dropped. And I was like, well, okay, so can I do that now? Like, are you still doing this, Yeah. And so we ended up investing in his, in a 439 pad mobile home park portfolio, which we are still currently invested as a limited partner in, passive investor, which is about to go full cycle, actually 3 years later, about to sell it. So that's going to be great. But then, so one thing led to another, started, again, it's all about networking and the people and actions you take on those relationships. And I found myself at a conference in LA and I said, well, I'm looking around and going, that guy's wearing like a hoodie and cut off jean shorts and he owns 1,000 doors. Like, why? I didn't know. I thought billionaires were buying apartments, not kids from Iowa,
Yeah.
So that kind of changed everything for me, and signed up for coaching and just was ready to take action. And because of that, now roundabout way of answering your question, because of that, I was adding value to people and being consistent and trying to figure out which piece of the wheel on a team that I would be able to fulfill, and found a couple teams that I could work with or initially and fill one piece. But then we started syndicating on our own as well, finding our own deals. And that's kind of what we do now as well. So my first full year of real estate investing as a general partner, we closed 571 doors.
Wow. That's awesome. So just to kind of describe this process to the people that may not understand it, as a general partner, you're raising funds from your limited partners. Basically, it's kind of a different structure than like if you're buying personally. Can you kind of explain it a little bit?
Yeah, sure. So, I mean, you kind of summed it up there. You have to follow Securities Exchange Commission regulations. As a non-broker dealer, I'm not a licensed advisor, so to speak. I'm not licensed to raise funds unless I fall under certain exemptions under the law, which basically there's 506C exemption that allows you to advertise your deal, but you can only take money from accredited investors, take investments from accredited investors who have, a certain income, $200,000 per year for the last couple of years and expected going forward. Or a 506B, which is raising capital from basically friends and family, people you have a substantive pre-existing relationship with, but you may not advertise those deals.
Right.
So those are kind of the two, examples of how you can do it. But ultimately, it is buying say we go for 100+ unit apartment complexes. And you're raising the equity from investors and providing amazing returns to them at a certain, internal rate of return. And you give them set up a webinar for them so they understand the investment. And so it's highly regulated. Its books are wide open. It's a very common thing that I didn't know existed until a couple of years ago. So it's pretty neat.
Well, what kind of challenges did you face when you were first starting to raise capital for these investments?
First chance I had, it was, I don't know anybody it was the self-doubt. You get the mindset piece of it is the most critical element to real estate investing or wealth creation or just doing anything you want to do that seems like there's an obstacle in the way. You've got to be willing to look past that and go, well, I don't really care if I don't think that I can do this. I need to do this. Yeah. And I have a very deep-rooted why that drives me through those things. So it was really just reach out to look at my phone. If you take out your phone, if you're listening to this right now, take out your phone and scroll through the hundreds of people. Guarantee you someone has a retirement account, someone has an uncle, someone has a cousin, someone has a mother or father or themselves. They don't know what to do with some money they've stashed away in a savings account or whatever it is. You just don't know until you start telling people what you're doing and who you are and why you're doing it. And then people will start to kind of come out of the woodwork once they see that in you.
Oh yeah, for sure. Yeah. So I guess just to sum that up, the biggest challenge when you started was your own doubting Absolutely. Yourself and not knowing where to get the funds from. But you're saying just look at the people you already know. There's money to be found there.
It's right. And there are issues with imposter syndrome too. I mean, we all kind of wrestle with it. Like maybe you sit there and go, well, why do I deserve to be a great podcast host or whatever it is, right? It's just, that's just human nature. And we have to be able to push through that. And I say it as much as I can. The obstacle is the way. The things that you want are on the other side of fear. Once you break through that, you'll realize amazing things, but also recommend having big goals on the backside of those goals as well, or else you'll never be fulfilled.
For sure. Yeah. So when you're looking for deals today, what kind of properties do you look for? And is there like a specific strategy that you follow every time, or are you open to different types of properties, different strategies?
Yeah, we're focused mostly on commercial multifamily. We try to stick to between 80 plus doors. We say 100 because we're looking for larger deals now. Really, ultimately, you'll find if you want to start doing this, it seems scary to say, oh, we're going to buy and operate a 100-unit apartment complex, but it's not a whole lot different than buying a 10-unit,
right? Except
there are systems in place to pay for themselves, like property management. The larger scale you go, the more passive systems, relatively passive systems you can create, like somebody who you're paying, your property management company that you're paying to manage it is going to have software systems in place already that you won't have to purchase, right? And little things like that just makes it easier as you scale. So typically multifamily, we have considered self-storage, and some of our investors are interested in self-storage as well, which is a great asset class. And I have colleagues peers that invest in self-storage as well. We also own mobile home parks as well. So another good asset class.
Yeah. And are you purchasing in a specific area, or are you spreading out your investments across the country?
We're focused mostly where we have relationships, so we can effectively manage the assets. We focus in Indiana primarily right now. We'll look elsewhere, but we realize that that's not the low-hanging fruit. And we are also building active duty passive income on, which is our primary focus, kind of in parallel with the multifamily assets, two separate groups, but that's what I'm involved in. And so just balancing that time. And so to us, when we buy multifamily assets, we have to be aware that the best use of our time and our investors' time is if we stick to something that we know. And you'll get, you build those relationships too when you stick in one area. And so now we have brokers sending us off-market listings that we can analyze and move forward on.
Yeah. If you're looking to structure a general partnership type of deal, is that something you could do on the GP side on your own, or would you suggest like getting together with somebody, a partner, or maybe more than one person to do the deal together as a GP?
Never do it on your own. A general partnership, you must have other team members. Okay. And I would say that, first of all, you're going to have a Securities Exchange Commission, an SEC attorney that is physically, drafting up all of the documents, the private placement memorandum, and all the legal documents you need. But aside from that, one person cannot go and buy, and cannot is a very definitive word, right? It's a very strong word, but no one should ever try to do that. You're not protecting, if you're trying to do capital raise, you're the guarantor on the loan, you qualify for net worth and liquidity, your asset manager, that's too much for one person to do. So between 2 and 5 people on your general partnership is a very typical structure to kind of divvy up those. And people are going to have strengths and weaknesses. You need to have somebody who's extroverted and loves going on podcasts. You need to have somebody who is introverted and loves crunching numbers behind a screen and wouldn't be caught dead on a stage talking in front of people. So you really do have to have that team created in order to create the most value for your investors.
Cool. And how did you assemble your team? Was it through like these different conferences that you attended, or were they like family friends or friends that you grew up with or whatever, anything like that?
Yeah, 2 things: constant networking. You're constantly telling people who you are, what you do. Branding is essential also. People know us as military real estate investors. If they think about a property that's coming up near a military base, they'll send it to us because they know that we have something to do with the military. It doesn't even matter, right? It's just where two industries collide. You've got this niche. We have military members, for past or present, and you have real estate investing, and we are where that intersects. So that branding piece is important. The other part so that's networking, but my team, the team that we started our company with, we're all a real estate investing company. And so we said, well, let's get into multifamily together as well. So we still do.
Cool. What's the big vision there for your company, for your general partnerships? Is there like a certain number of units that you're targeting?
It used to be. The hardest deal ever is 0 to 1, getting your first deal. So if you're considering this, you've got to commit yourself to even 5 years of just networking and constant output and consistency and building that solid financial or educational foundation and network. But once you get past that one, it's not necessarily about door count anymore. It's about what your goals are. So to answer your question, our goal is to provide amazing returns to our investors when we find, and we underwrite very conservatively, and we don't need to stretch anything because we have these other companies as well that we're building for military members. So it's really just on the multifamily side, we have the ability to wait for the right deal and make sure that happens, but also someday down the line, and I'm kind of getting ahead of myself here, but what we would like to do is create a fund where our community can invest in what we're doing. And we'd like to figure out a way to donate those proceeds to nonprofits, to veteran-owned nonprofits.
Awesome. That's great. Yeah, you guys are doing really cool things. Um, so over here, I'm sure it's like in Canada, I'm saying, but I'm sure in the States there's something equivalent to it, or maybe the exact same thing. But we have either joint venture agreements or co-venture agreements. So you basically have two parties that would come together and, let's say, buy a piece of real estate together. What would be the advantages of doing a GPLP versus just doing a joint venture for the acquisition of a property?
Scalability, really. I mean, if you think about a JV, I'll preface this by saying JVs are amazing. That is the goal. Ultimately, is to not have to have 100 investors on a deal or 10 investors on a deal, right? But I'd say that's maybe my goal. But someone else's goal might be, I just want to syndicate forever because I can grow to 50,000 doors and never have to have any of my own money in the deal or whatever their thing is, right? And that's what I love about multifamily investing is it's so dynamic. You can kind of create your own business however you want to. But a JV is great because you're not answering to anyone except for partners in the deal.
Yeah.
And that's great. So it's if you fail, it's your failure. It's not your investor's failure. And a lot goes into that. I mean, you can imagine the backlash if something were to fail. But if it's just you and a JV partner, it's probably a little less stressful. Asset management's a little cleaner and smoother. There is no investor relations piece to the deal where you don't have to give monthly or quarterly updates.
Yeah.
But a drawback would be, well, you're putting your own money into the deal at that point. So if you have limited amount of funds, you have limited amount of deals that you can accomplish together.
Right. Oh, absolutely. Yeah. So scalability is one big thing. But I guess one of the cons would be answering to a lot of different people, having a lot of opinions pretty much on every deal. Yeah.
And okay. LPs know that they don't have a say in the asset management piece. They're just trusting you with their investment. And your job as a GP as a general partner is to go operate as according to the business plan and according to all the things that you showed them in the private placement memorandum and operating agreement.
Yeah. Yeah, just out of curiosity, I'm not too familiar with like the GP structure, but is there something equivalent to a board of directors or something like that for decisions?
No, it's just the GP team. And it's really just, like I said, 2 to 5 people. It could be a little bit larger than that, but that gets a little bit sticky sometimes. So yeah, it's pretty easy to communicate with 5 people on a daily, if not weekly basis. So
right.
Yeah.
And do you have different people for different deals, or is it kind of like your core group and you guys do all your deals together?
Yeah, both. We have a core group that we do deals with, but you're totally free. I mean, you have an operating entity that you can use to, or you can create new ones and go work with other teams. It's a pretty open system where you're networking out at different events, or you're on podcasts, or you're doing whatever, and you have your core group, and you can also if you can add value to someone else's team and they reach out and they're really interested in what you have to offer, you're absolutely free to go work with other teams as well. So
awesome.
Yep.
Yeah, I want to touch on, you said, I think that you were investing in Indianapolis. Is that right?
Yep. Yeah, the Indy area. Yep.
Or Indiana. So what is it that draws you to that market? And can you tell us a little bit about like some of the deals that you work on or you've worked on in the past?
Yeah. So sometimes you're searching, I said it earlier on the show, finding money and finding deals are the two things that people always struggle with. And they also need to be working on in parallel always. Even if you don't have a deal, you need to be looking for money, looking for your next investor. So sometimes you're searching for the deals and sometimes the deals find you. And in this case, the market found us because a partner that we're working with already had a 56 unit in the area. And, but other than that, so then we started networking and, knowing people and going out there and making sure we knew the lay of the land. And I get really, in detail with knowing city officials. I'll go meet with the mayor and do whatever I can to add value to the community as well.
Cool.
So we're known as an entity that goes and does good things for the community, but, so it's just a good idea to get plugged in that way. And then, stick around a market that you know.
Great. Yeah, that must be an awesome feeling to know that you're positively impacting a community by, I'm assuming that when you purchase these assets, you are improving them typically and making them better for all the residents.
Yeah, we go a step beyond that as well. One thing that we have incorporated, I created this kind of idea that we can rally the community around our asset instead of just doing great things for the tenants. So like I said, I'll go meet with the mayor and we'll go meet with the tax commissioner, tax assessor. We'll go talk to city officials. But another thing we do is we hold a ceremony at the property on Memorial Day, so in May,
Mm-hmm.
and we will dedicate all of our properties individually at one at a time to a Medal of Honor recipient. Hopefully, usually we'll find somebody who's local to the area, to the city or state or county, and we will honor them and have a ceremony and just mount a plaque to either the building or a rock under a flag or something like that. And we'll host just an event with bounce houses and, a food truck and invite the mayor. I even invite the governor of Indiana, and they were sending till COVID hit, they were sending a proxy down to say a couple words about this Medal of Honor recipient. So that type of thing not only rallies the community around your asset, but it also does well for your asset. People now know that your apartment complex is in good standing in the community and that it exists, because maybe some people hadn't seen it. So,
Oh, for sure. Yeah, well, that's great. It sounds like you're really passionate about what you're doing. So it's great that you're getting involved in these types of projects.
Well, passion comes, and I mentioned this earlier, I have a deep-rooted why. I do this for the memory and pride of those who've gone before me, for they love to fight, fought to win, and would rather die than quit. So as a special operations veteran, my brothers and sisters who are no longer here and cannot feel the pain of entrepreneurial struggle or the opportunity that we find and seek, I do this for them. And there's nothing that is hard about becoming successful or becoming wealthy or taking that next leap or moving past fear or whatever it is, because I'm breathing, I'm here and they're not. So I have an easier time getting up out of bed every day, even on a hard day, and going after and tackling the day.
Oh, for sure. For sure. So I have a question about the types of properties that you're buying. Are they run down, mismanaged properties, or are they usually turnkey and fairly easy to take over?
Intersection right in between that. We won't buy in a D-class neighborhood. My rule of thumb is if I can walk at dusk around the streets near the property with my wife, it's a good neighborhood, good enough to invest in. So blue collar, Class C properties that do need, they don't necessarily need renovation, but we have to analyze cash flow. We have to see what the value add proposition is. Our investors are going to look for forced appreciation of some kind. We don't ever count on market appreciation, but what is that value add? Can we reduce expenses? Can we increase revenue? A combination of both. Maybe it's mismanaged property management, like you said, and we can swap that out to get things handled a little bit better, but it's managing the increasing revenue and reducing expenses that increases the net operating income. And that's what provides returns. So we just have to find out what that is on every asset. And then we're in a good spot. So,
yeah. Are you able to provide some examples of ways that you've been able to decrease the expenses or, increasing rents? Pretty simple.
Quick, easy one. Yeah. I mean, and you can't over increase your rents, and you don't want to over renovate because, and we do this analysis in due diligence before we close, because, you don't want to have granite countertops if nobody in the city has granite countertops, if no other apartment does. So, and that goes for single family investing as well and all that. So, but you really want to, so look at contracts. I'll give you one example that's really easy to understand. When we took over this 80 unit, we looked at all the contracts and found that we were paying twice as much for our garbage contract each month than with another company that provided the same service. So we reduced our garbage contract by $600 a month, which over the span of a year, divided, so that's increased, it's decreased expenses, right? So it increases your net operating income, and divided by the cap rate, increased the value of the property by $100,000 instantly, $102,000. Awesome. So that's why we love, commercial multifamily, the way it's valued, and it's as simple. It's not necessarily easy, but it's as simple as figuring out if you're overpaying some kind of expense. Can you bill back water to a tenant? Only if other apartments are doing the same, of course. Or do I have a leak that I need to fix? Why is our water bill so high? So that stuff can go a long way.
Oh yeah, for sure. Do you send, like, let's say your plumber to inspect the units to see if there are any faucets that are dripping or leaky toilets or stuff like that?
Yeah, not necessarily a plumber, but we have regular inspections from our. We have a maintenance tech
Okay.
that actually lives on the properties,
Yep.
and they are responsible for, regular inspections, quarterly, biannually inspections on each unit, and they'll install aerators on the faucets to make sure they're not spilling out tons of water,
Hmm.
and also definitely checking for leaks, and then keeping up with work orders is another big one. When we took over this property, they had work orders that were 1 or 2 years old of
Hmm.
a woman who had been living there since 1996, and she's had a leak upstairs, of all places, from for over a year.
Yeah.
So just keeping up with work orders is important.
Oh yeah, for sure. Okay, cool. So that's we talked about some examples of reducing expenses and the impact of that. You did mention cap rates there. What are, just an example, what are some of the cap rates in the markets that you're in?
It's going to vary deal to deal, kind of neighborhood
Yeah.
by neighborhood, but we're not in like Dallas. Dallas is really hot right now, where
Yeah.
you've got 4 and 5 caps, and
Yeah.
so we're looking at between 5.5 to 7 caps.
Hmm.
7 be on the high side right now, but yeah, 5 plus. Say a 6 cap is pretty normal where we're at secondary and tertiary markets.
Cool. Okay. All right. So we covered quite a bit here. Is there anything else we want to discuss before we move on to the next section?
Up to you. I'm good.
Okay. All right. So the
I could
next
talk till
section.
I'm blue in the face. So
Yeah. All right. Fair enough. The next section is called the random five. So I'm just going to ask 5 random questions,
yeah.
and you just tell me the first thing that comes to mind.
Well, this is going to be hard.
Sometimes it is, but I think these ones were pretty easy. So,
Okay.
number 1, what possible future invention do you wish existed today?
Ooh, the first thing that came to mind was time travel.
Yeah, that'd be awesome.
Ooh, but then it would kind of ruin things. So I don't know. I'll stick with time travel because it would
Okay.
because it would be cool.
Yeah.
I
Yeah.
always think sometimes like how cool it would be for a moment or for a day or something
Yeah.
relatively safe to go back to the 1800s and see the gold rush or something.
Oh yeah. Yeah, that'd be
So
so cool. Even
yeah.
just to not even live through it, but just to see what was happening, that'd be cool.
Yeah, even just
Yeah.
a kind of a out of body bird's eye view of what was going on would be
Yeah.
super cool. Yeah.
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 All right. Number 2, if you had a time machine, which is kind of what
Oh,
you just answered, which period would you visit?
I mean, 100%. I would go back to the 1800s probably. I find it very fascinating. We live in Northern California, near where the gold rush in the States kind of began, and we're about 15 minutes from there. And we go there with our kids, and we pan for gold still, as if we're going to find some big nugget
Yeah.
in the stream, or something. But I just find it so fascinating to think about how hard it was to just even get into that valley on horseback with no roads, no trails, and just exploring a new land. It must have been
Mhm.
just incredibly tough. So
Oh yeah.
love to
Yeah.
go back.
Cool. Okay. Number 3, what's the longest journey you've ever been on?
The longest journey, distance or time, or
I'll leave that with you. You answer whatever
Hmm.
comes to mind.
I think I am in the middle of it right now. I would say, and it's funny because this is a journey post-military where I am seeking who I am and who I know I am.
Mhm.
And my mission is to educate, empower, and to help people grow. And we're giving in a big way now, and we have huge giving goals. And I don't know where all that came from, but all of a sudden I'm obsessed with ending veteran homelessness, um, and we're doing it. And so I think thinking about the journey of where I am now to where I'll be in 10 years is the longest journey. It's a journey that is actually getting longer. Like the universe is large. My journey is getting longer as the
Yeah.
days progress. So
Yeah.
excited.
Well, yeah. Well, you're doing great things and you're accomplishing a lot. So keep on going, and it's going to be exciting to see where you end up in 10 years.
Promise I will.
Yeah. Number 4, what's a memorable place you visited?
First thing that came to mind was the Grand Canyon. I went on a backpacking trip with my buddies back in college, and that's the first time I think I realized that a phone, although I think only flip phones were a thing back then, but that a phone or a camera can't actually capture the vastness and the color and the depth of some things you see. You know, when you try and take a picture of the moon, it's like a really pretty moon and it's like just a yellow dot on your screen. You're like, wait. You can't see anything. So yeah, that's the first time I really realized, man, I need to stop and just look with my eyes. Forget the phone, forget trying to take a picture of it with a, camera. So yeah, Grand Canyon, it's a good one.
Cool.
Very memorable.
Yeah. Okay. And the last question, what success principle do you live by?
That's the easy one. The success formula, I believe to be 4 things. It is learn all you can, network your butt off, add value to as many people as possible, take action on a regular basis. So if you do those 4 things, learn, network, add value, take action, with the intention to only be 1% better daily, success will hunt you down.
Oh yeah. Cool. I like your answer. That was like probably one of the better answers I've heard to that question. So so that's great. And the last part of this is, how do people reach you and what are some of the services that you provide?
People can reach me on Facebook. You can go to our website, activedutypassiveincome.com. I'm Real Eric Upchurch on Instagram. And services we provide, if you know anybody who's a veteran in the States, currently or previously, have them connect with us. We have a #1 best-selling book that we give away for free. And we have financial services. We have free legal consult for asset protection. We have tax strategy for real estate investing. We have education courses and masterminds. And so really just a comprehensive company for anything real estate investing and military.
Cool. Awesome. Well, Eric, thank you for sharing everything. And I'm happy to hear about all the great things you're doing for people and for your military community. And I wish you all the best moving forward. I'll be sure to include all your information in the show notes.
Thanks so much for having me. I appreciate it.
Right. Thanks once again for listening to another episode of the Well Off Podcast. Just want to remind you that if you do appreciate the content, all I ask is that you comment, maybe like it if you can on the platform that you're listening to it on, and finally share it with friends and family. I'd love to get the message out there, and it would mean a lot if you can share it. And finally, I just wanted to offer you, as a valued listener, a free copy to the Roadmap to Real Estate Investing, which is a document that I've put together which helps you identify what strategy would best suit your needs at this current time. You go over certain things that are included in this document step by step, and it'll hopefully provide you with some clarity. So have a look. You can go to www.welloff.ca/guide to download your free copy.